Okay, now that we are familiar with the main principle of financial accounting, let's see how, accounting and financial accounting activities can be, managed using SAP ERP. In particular, we first start by deep diving into the type of data that ERP and in particular SAP needs to support financial accounting activities. First of all, the organizational data associated with financial accounting are of three types, and we already are of two types, and we already explored these in the previous sessions, which are organizational data and master data. Let's focus on organizational data. For accounting activities, the organizational data associated with financial accounting are essentially client, company code, and business area. And now let's try to clarify more in detail what do they mean. When we talk about client, we already see the meaning. The client is the highest organizational level in a company system and in ERP system, and it represents the enterprise that consists of multiple companies, and there is only one client for each enterprise. Here I have put an example coming from Kellogg's, which is the client which all the second level brands here are associated, like All Brand, Cornflakes, Rice Krispies, Pop-Tarts, Pringles, and so on. So Kellogg's is the client, and these below are all the company codes. Then, if we go to company code, of course, the various companies associated to a client are represented by a company code. Company code are the highest level for financial reporting, meaning the documents that we have seen in the previous session. Here you see the example for Kellogg's. So here, sticking with our example, all these companies, which belongs to the same client, Kellogg's, will have a specific company code and their specific financial statement. In the case of GBI, if you remember, we will have GBI US and GBI Germany that will generate separate financial statements to meet the regulatory requirements for each country, and each one will have its specific company code associated. If you remember, US 00 and DE 00. Of course, multiple company code can exist, which depends on how the company organizes in its financial statement. Company codes can be set for each legal entity, you see that Big Cadillac, Automobile, Chevrolet, Hummer, Saturn, Saab, and GMC, or can be defined also on a country-based perspective. So according from company to company, it depends on how these company codes are defined and organized when multiple company codes exist. Then we should remember always that in each company, business areas exist. Business areas are essentially internal division of an enterprise that are used to define areas of responsibility or to meet external reporting requirements of an enterprise segment. A segment, so, is a division of an enterprise for which, the management monitors some performance, some financial performance, like revenue, like cost, like profitability, and this is done separately from other segments. In particular, financial statements are generated for each business area within an enterprise. And a business area is often based on either the enterprise products line and its geographical division and across company codes. Of course, business areas and company codes are strictly related, as a business area can cross different company codes, and a company codes can cross different business areas. So please remember this linkage. Let's see an example of this. As you are familiar with GBI, let's make an hypothesis on two cases relating to the bicycle industry. In the first case, GBI business areas are defined in terms of products of the individual company, so bicycle and accessories. In this case, financial statements are generated for all the companies that operate producing and selling bicycles and accessories. In the lower part of the figure, instead, the business area are instead defined in terms of the geographical location of the individual companies, saying North America and Europe. Those financial statements will be generated for all the companies which operates in North America and or in Europe. In this case, US, Canada, Mexico, Germany, and UK. In both cases, by aggregating the financial statements, of course, we need to obtain the global financial statement of the GBI enterprise. If you want to stick with the same example we already see about Kellogg, we can see that for Kellogg's, the business areas are defined in terms of region in which Kellogg operates in. So, if you remember all the companies that are beyond the scope of the Kellogg's enterprise, financial statement will be generated for all the companies that operated in one or more of this region. This was about the organizational data. Now let's go with the master data which are needed by financial accounting activities. As we already stated, the goal of financial accounting is to record the financial impact of business activity. And these impacts are recorded and are tracked with what we call the company general ledger. The general ledger includes many accounts that company use to record financial data, and each account tracks different type of financial data. Some accounts record sales and revenues, like the income statement accounts. Others record the cost associated with producing and selling products. Other records the variation of assets and liability of the product of the company, like in the balance sheets account. A list of accounts that can be included in a general ledger account. So the list of accounts included in the general ledger account is named chart of accounts. But now let's explore this more in detail. A chart of accounts essentially, and this is the acronym of COA, is an order listing of accounts that comprise the company's general ledger. There are essentially three types of chart of accounts: the operative chart of accounts, the country-specific chart of accounts, and the group chart of accounts. The operative chart of accounts essentially includes the operational accounts that are used to record the financial impact of an organization's day-to-day transaction. So, it's the primary chart of account maintained by an organization. So it means revenues, it means cost, it means debts, credits, and so on. All the accounts in the operative chart of accounts are mapped to alternative accounts in country-specific chart of accounts. And companies create these alternative accounts to meet special country-specific reporting requirements. So country-specific chart of accounts can also map some operative accounts, but because there are companies that are specific reporting requirements related to their area. Of course, a chart of account can be used by multiple company codes. For example, if you consider General Motors, different General Motors companies like BIC, Cadillac, Oldsmobile can use the same chart of account, for example, the US chart of account, while instead SAAB will use the German chart of account. So a chart of account can be used exclusively or shared by multiple company codes. But I mean, the rules is that every company within an enterprise must use at least one chart of account. Can use more than one, but at least one chart of account. Because I mean, it's through the chart of account that there is the possibility to record all the financial operations that affect the company during the year. So all enterprises must maintain an operative chart of account in order to record financial data. In contrast, group and country-specific chart of accounts are optional. We didn't deep dive in what we call as a group chart of account. A group chart of account essentially is included when an enterprise includes several companies, and it used to consolidate financial reporting. Here you see, you see the example of the consolidated statement of income of Kellogg's, which should give you the idea of what a consolidated balance sheet is and what a group chart of accounts is. So a group chart of accounts contains group accounts that multiple companies within an enterprise use to consolidate their financial reporting. So Kellogg's is made by different companies, each one using different chart of account or similar chart of account, but each one having the same. When an enterprise includes several companies, in addition to create financial statements for each company, so for each company codes, like Kellogg's with Old Grain, with Pop-Tarts, and so on, it must also create a financial statement for the enterprise as a whole. So the consolidated, in this case, statement of income for Kellogg's that you see in the slides. This consolidation is necessary because the enterprise is itself a separate legal entity, so Kellogg's exists as a separate legal entity, like a parent or a holding company, and needs to satisfy some reporting requirements. So, using a group chart of accounts, like in this case, Kellogg's is able to generate its financial statement starting from the chart of accounts of each single company that falls beyond the scope of the Kellogg's brand. If it is not clear, if we step again to the GBI case, we can see that each GBI company use two types of chart of account. We have, first of all, both the GBI US and GBI Germany use the international chart of account for registering transaction. But then there is also, which is the main chart of accounts, but then there is also what we call country-specific chart of accounts, the one for Canada, the one for North America, and the one for German, that are needed by GBI US and GBI Germany in order to meet specific accounting requirements that are driven by the regional legislation about accounting of US and Germany. The accounts in the general ledger are, defined based on the selected chart of accounts, as we already discussed. We can see that we can say that once the chart of accounts are defined for each company, the general ledger represents no other than an instantiation of the chart of accounts for a particular company, and can include some or all the accounts in the chart of accounts of the company. You can consider a company and extract some of all the financial transactions which are recorded in the chart of accounts, which are included in the chart of accounts, and let's make them shown through the general ledger account. That's the idea. Of course, like most master data, the data in the general ledger accounts are segmented by organizational level, so like client or plant or company and so on. Very simple terms, we can see that a general ledger account and data include both the chart of account data, it can be some of them or all of them according to what we want to see, associated to particular company data. But now let's see more in detail what we mean about this. So general ledger account data are first of all include data about the client, what we call chart of account segment. The chart of account segment typically includes an account number, a short and long description of this account number, and an indication as to whether the account is a balance sheet or a profit and loss account. So if you are dealing with income statement or balance sheet, each account is assigned to a unique account number to distinguish it from other accounts in the chart of accounts. And the financial data that are present, the final data element that are present in the chart of account segment is what we call the account group, which essentially groups together accounts with similar characteristics. Now let's try to understand what an account group really means. All bank and cash accounts, for example, are consolidated in one account group called liquid assets. So, for example, an account group can group all the assets like bank and cash account that are liquid. Accounts within each group are numbered using a specific range. For example, the liquid assets that we recall some minutes ago are all in SAP ERP are located between 100,000 and 110 and 300. So we have that liquid assets are falls within the scope of 100,000 and 110 300. Further, accounts in different account groups require different types of data when they are used in company's general ledger, meaning that the data contained in the account group can also include dates, tax-related data, organizational data, and so on. And this can be, required, so mandatory, optional, only to be displayed, and so on. So these are the information that are included for the general ledger in the chart of account segment or the client. Then we have also the company code segment. The company code segment instead includes all the information about the company for which we want to collect information. Of course, although the account in the chart of account can be used by more than one company, of course, each company can use the chart of account in a different way. So here we need to specify how the company we are considering use the chart of accounts which is included in the general ledger. So it means that we need to specify, for example, which is the currency used by the company, which are the tax-related data. If field status group are displayed, and so on. So the general ledger account requires that certain company code specific data are provided in addition to the chart of account data. So it's not enough to display the information about the chart of account segment, but you need also to complement this with company code data. I know that, I mean, this is quite technical stuff, but let's try to understand more in detail this concept, which is, I mean, more difficult to explain than to be displayed with an example. For example, let's consider GBI. GBI has created a custom chart of accounts named GL00, which use, the operative chart, which is used as the operative chart of accounts for all the companies in its enterprise. So the GL00 is a chart of accounts created, and it is used for all the companies in the enterprise, the main chart of accounts. Okay. GBI, in this example, does not use country-specific or group chart of accounts. So GBI US and GBI Germany, I mean, in contrary to what I told you before, but this is just an example, use just this chart of accounts in order to register their financial transaction. However, the chart of account segment indicates also that the bank account, which this is the number of the bank account, is part of this chart of accounts, okay? And both GBI US and GBI Germany use this account, but the two companies use it in a different way. And this different way of using this chart of accounts is displayed in the company code segment. In particular, you can see that the companies which are characterized by different company codes use the chart of accounts GL00 in a different way, in particular refer to the currency. One in US dollar and the other one is in euro. Here is another example. So this is an example from an extract of the general ledger. Okay, the company is let's say US00. And in this case, we want to display the operational accounts of the chart of account segment related to, the GL00 chart of account. In particular, we want to display the sales, the rental income, and the purchases. And each one of these accounts will have an account number associated. So, by doing that, all the financial events related to this operational account will be displayed. So, let's have the recap. We have the GL00 chart of account segment, which is used by both GBI US and GBI Germany. All the transaction, all the financial movement are registered in the chart of accounts segment, but can be used differently from a company to another. In this case, we want to show the general ledger account data of GL00 used by the company US00 related to sales, rental income, and purchases. And in this case, you see all the financial events that have interested the company during the year expressed in dollars, as US00 required the chart of accounts to be displayed in the chart of accounts of sales, rental income, and purchases displays in dollar. Of course, we already discussed which type of accounts can be included in the general ledger. We see that we have balance sheets accounts like asset, liabilities, and equity, and we also have profit and loss accounts like revenues and expenses, and all these type of accounts can be displayed in the general ledger account. Then, another critical concept, but I mean, I'd like to spend some more time on this, is the concept of sub-ledger and Recon account. Because in a company, some financial data are not directly maintained in the general ledger. For example, customer account, which track the amounts that customer owe and the payments they have made to the company, are maintained separately for each customer. So, even though it is necessary to track sales and payments separately from each customer, it's not necessary to include each customer account in the general ledger. So, and similarly for vendor, data about vendor are maintained in separate accounts, one for each vendor, and not all these accounts are included in the general ledger in the general ledger overview. So we say that such accounts are maintained in what we call the subsidiary or subledgers accounts, which are not part of the general ledger. So although customer and vendor, but also assets, single assets, are not part of the general ledger, however, this data, needs to be then transferred to the general ledger, because the general ledger, to display the information I showed you before, needs also data on customer, on vendor, on assets, and so on. So in order to do that, companies can accomplish this task by posting the data from subledger accounts where they are moved into special accounts in the general ledger, which are called reconciliation accounts. Reconciliation accounts are general ledger accounts that consolidate data from a group of related subledger accounts, such as customer, vendors, and assets. It's intuitive, but as we can see here, if we deal with customer that in subsidiary or subledger are registered in different accounts, subsequent reconciliation account is account receivable. For vendor, instead, is accounts payable. For asset, specific assets, their reconciliation account is asset. In particular, as the general ledger can include multiple reconciliation accounts, of course, it is necessary to indicate which subledger each reconciliation account is associated with. And this information will appear in the reconciliation account for account type in the account type field in the general ledger account master data. Particularly, it is interesting also to notice that one specific characteristic of this reconciliation account is that it's not possible to post data directly into them. Data instead must be posted into subledger accounts and then uploaded or claimed through a specific operation in SAP ERP to be displayed in the corresponding reconciliation account. If it's clear, if now all is clear, before we turn our attention to the processes involved in financial accounting, we finally need to explain two key financial accounting concepts. Accounting documents and parallel accounting. And we do that by introducing also a few concepts for each bullet. In particular, let's first have a look at the structure of a financial accounting document that can be displayed by an ERP system. A financial accounting document records the impacts of the financial data of a transaction step of financial accounting. A financial accounting document can be separated in two areas. A financial accounting document consists of an header section and the detail or line item section. The header section includes data that apply to the entire document, such as the document number, the document type, the difference date, the company code, the currency used, the reference number, and so on. While the items detail describes what's in the financial document, so which type of information we are displaying in the financial document. The details section in particular typically consists in two line items, debit or a debit item or a credit item. Each line item includes the account number from the general ledger, a description of the account, and an indication of whether the account is debited or credited and the total amount. But let's deep dive more in this concept. In each financial document, first of all, it's likely that the process which has generated the financial accounting step is reported. In particular, in the document type, we can have a link to the process through the customer invoice, and this is the acronym for reporting document type that has generated the financial accounting step, or the customer payment, or the good issue, or the good receipt. Of course, the document type determines the document number range and the account type associated with the posting. The account type in a financial document indicates whether the line item in a document is a debit or credit posting and specify the field status of additional data needed to post the item. Example of account types are customer, so D, vendor, K, asset A, material M, and general ledger account with S. Of course, the debit or credit item is then linked to what we call a posting keys, posting keys, which is essentially a two-digit code that determines how a line item is posted. Of course, the digit code is associated to the account type, as you can see in the table. For example, if we have a posting key as 01, we indicate invoice, which is a customer invoice, which is of course linked to a debit item. If instead we indicate 13 as a posting key, it's still an invoice, but it is an invoice for a vendor, which means a credit. Finally, I want to just clarify a particular concept which is called parallel accounting, because as we see, the general ledger is based on the operating chart of accounts, and an organization can implement multiple ledgers in parallel and use each ledger for different purposes. And this is called parallel accounting. So if a company implements multiple ledgers in parallel and uses each ledger for different purposes, the company is doing parallel accounting. Of course, in a typical arrangement, an enterprise will implement one set of accounting principles for all companies, company code, in the enterprise. And these global principles are then consolidated in a single ledger known as the leading ledger. A leading ledger, of course, is required, and all the transaction data are posted to it. Remember the case of GBI. We'll have the general ledger account, but then we also say that each company can also have some specific accounting practices, like following the GAAP standard for US and the HJB standard for German. So besides the leading ledger, a company can also define non-leading ledger for each company, so each company code based on local accounting practices. And here you see what we discussed. In the case of GBI, the leading ledger are the IFRS principles, so which are related to the GBI enterprise. However, at each company level, so US and Germany, certain non-leading ledger are defined in order to meet local accounting needs of the two companies, US and Germany. So GBI uses the leading ledger to consolidate its financial statement for the global enterprise, and the non-leading ledgers to meet local reporting requirements in Germany and in the United States.